This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, September 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down 4 1/4 at 425 3/4. November soybeans were up a half at 1046 3/4, and December Chicago wheat was up a penny and a quarter at 524 3/4. This morning we had an export sales announcement, 148,971 metric tons of corn to unknown destinations for 25. We will have NOPA crush out at 11 o'clock Central, looking for a number kind of in the 185 to 186 area. So we'll take a look at that, discuss that on tomorrow's show. What we know is we start the week, got a Fed meeting this week, so everybody's got their eyes kind of on the outside markets. It'll be interesting to see what the Fed does. The market's pricing in pretty much a certain cut here, so it'll see what the response is there. And also we got Secretary Bessent meeting with his counterparts from China in Madrid this week. So once again, just looking for any sort of outside market news that could potentially affect our markets, especially as it relates to China. So it'll be interesting to see there. Outside of that, we've had some time to digest Friday's report. Certainly, you could argue not the response in the market that you would have guessed, given the acreage increase and what it did to balance sheets there. But this week, Justin, it feels like we're going to start getting more and more yield reports. Guys should be kicking, going pretty good through Iowa, Northern Illinois. So hopefully that'll give us some impression of what we got out there.
Yeah, no, certainly. I think obviously it felt like there was plenty of people willing to buy the report, kind of no matter what it said. So I don't think, based on the numbers, was any reason obviously to buy the report. I think it's still the big unknown on yield. We started from such a high level in the August report, and that's kind of your starting point, and you're trying to analyze the Western acres. Is Iowa and the West got a ton of rain? Is that enough to offset some of the dry areas that we saw in the Eastern Belt? Then you start running into disease pressure. And so I think there's just so many question marks right now, myself included, just, where are we trading? And it's a wider range than I can remember maybe ever trading, outside of like maybe a 2012 drought where imaginations run wild on what the final yield could be. Outside of that, I'd say this is one of the widest years I can remember on anything from mid 170s to upper 180s. I mean, just a really wide range of what you're hearing from analysts. So, as always, I kind of look into what the actual data is from clients. So far, I think it's been certainly below what would be needed for the government numbers, but that's super early. I know there's been a ton of disease pressure, and it's really been showing up the last several weeks in Iowa. And, really Iowa and the West is really what's supposed to drag these national yields up a bunch. So we will see. To your point, I think we'll be getting into, we just started, a couple fields of beans around us in Northern Illinois. I expect that to really start ramping up here, kind of all over the place. So I don't know if you guys are seeing something different, but that's kind of my feeling right now. And that's why we're rally. Now you have to also respect we've had a really good rally, and we found another 1,000,004 acres in corn. So we've got which has been everywhere, the highest acre since 1936. I mean, there's a lot of corn acres, and I think there can be a lot of arguments on the numbers, but they're the FSA numbers, and I still think probably the most accurate. And I think something had to do with the very high subsidy levels that were introduced, the increase in farm bill levels. I think that was maybe some unintended consequences that pushed more acres to corn than otherwise would have been. and also in a unknown trade war with China. And a lot of people that planted beans remember how bad the bean market got, last time we got into a prolonged war with China. So there could have been several different factors. The ratio also was helping. So it might have just felt like the safer play. And when you have, lots of people switching 10% of their acres, or something like that, it adds up. So I think there's a lot of different factors. I do think the acres are probably pretty accurate. It's unfortunate how they come out in stages and it just keeps, increasing. So hopefully that process is improved in the future. Now the yield's a different thing, right? I think, looking at NDVI, how tall and green it was, I think it, had a lot of rain, everything got tall, green. And then we probably started running out of nutrients and we started running out of different things, and people weren't maybe scouting fields as good, and some of these diseases crept in that hadn't really done before, and you had a lot of different combinations that could have dinged the yield, outside of just like how green and tall it looked, which people were talking about in early August, but when you had that 188 plus number hanging over the market, it just almost felt like it was just too bearish. So now what? Right now we're almost halfway back we're basically mid-range of the move, like 436 D's corn. It's kind of in the middle of the February highs and August lows. So now it's kind of crunching your own numbers and seeing where you're at relative to crop insurance and all those kinds of things we keep trying to harp on, in my opinion.
Oh, very good. Dustin, good morning. What are your thoughts, I guess, as we start the week?
Yeah, it's crazy report response. And it's one thing to say, market's going to buy it either way. It's another to be like, okay, well, they bought it because they didn't believe the yield. It's wild. An extra 1.3 million acres, that's like 2 bushels of yield leeway that you don't have to question. It was a very wild response. So we got to listen to the markets telling us. There's a lot of people, I think, that thought that the funds were getting long into this time frame. The funds actually added some shorts last week. So another little surprising thing on the COT report on Friday. One thing I'm still watching is this takeoff, this lift off in the Brazilian real. Like we're going to run into this high competition with this record large safrinha crop here at some point. But the real strength is certainly helping us along that way because it's just going to help keep our competition. So that's something to watch. And maybe as part of this too, that it's just one small, a bunch of things adding up to why it's more supportive than not. But I certainly think that if you're one of those areas that is well above average yields and, you've been relying on insurance as your floor, this is a time to probably start thinking about getting some more downside coverage, because that insurance coverage is not going to be nearly what you think it was, right? Like if you're a 5% above average yield, these 5% deductible policies are not going to be in the money right at this price point. So,
yeah, Dustin, just to add to that, that's a good point. I mean, you got to remember, like a month from now, we're going to be half price on the crop insurance price on the fall price. So a lot of those puts, if you want to call them puts, which are massive, are going away. And so one of the things that we've seen in years where you have these kind of rallies is it doesn't rally quite enough to get people excited to sell because, especially if there's some bullish rhetoric. And then there's zero coverage for 2 crop years, going from, really the 3rd week of October into March 1st. And so you can see some really negative price moves there. Just based on market makeup of those put levels. So I think that's a really good point, especially, if you have an 80% policy, 85% policy, you really don't have any protection, and it goes down to 0 as you go through October. So, and the other thing I was going to add, just kind of thinking about it over the weekend is, all those things you talk about real, if you're bullish on Fed starting to cut rates because you think it's inflationary, if you believe the demand numbers the USDA has written down, which are huge, all those things would be more bullish, in my opinion, for new crop prices. Especially with so many acres that we have this year in corn. Could you get the carry out down sub 2 billion? Sure. I think what's really is interesting is further down the road of, okay, then you go back to, how do you not lose a big chunk of corn acres next year, especially with higher inputs again? how much corn on corn are people going to do? So I think a lot of those things would be, if you think it's a really big demand story, much more interesting out forward, personally.
Well, yeah, and I mean, put financing on that too. I mean, we're going to go into, correct me if I'm wrong, but maybe the third-ish year of very difficult conversations, from a profitability standpoint.
Right. So I think there's a lot of factors that, if you believe that all the bullishness in, this crop that's being harvested now, I think that it makes it even more exciting for new crop.
Right. Yeah. Because if the demand number, which I think the demand number is pretty suspect. I know we've had a huge sales, but like we have a huge safrinha crop we have to compete with the entire way. So that could be a front loaded demand if they become more competitive. But like to your point, like even if you're at a 180 yield at this many acres, it's going to be hard to get down to pipeline carryout. Like domestic demand is not going to do it. It's got to be exports, and exports are going to have this uphill battle all year. But we may have just enough demand to get us to like something sub 2 billion bushels. Let's say it's 1.7 again next year. That's just going to be extremely positive, probably going into a DEESH 26 contract, in my opinion, if it's because demand is really supercharged and we don't have all the acres pointed back toward corn next year. Right. And unless you financially incentivize growers to do that at these high input costs.
Right. I think, then you add on these talks like, China, US talks. I mean, still, again, big unknown, right? And you could come into where, the bean exports look really suspect because we just get it in an all out battle, or they actually figure something out and then the bean balance sheet looks not very burdensome. And now you're really worried about corn acres next year. So, I mean, there's still a lot that can happen, and we're right at this like big inflection point. So I think it's more about where do you put your chips on the table as far as a producer, like what's the most important thing to protect revenue wise, and what gives you more optionality for upside, and the biggest risk I still think is old crop corn, or this crop that we're harvesting. Another issue is we had Sep D corn spreads go off at a dud, at a big carry. If we're supposed to be having this big, tight carry out, we also have a September 30th stocks number. Like, what if we find a couple 100 million bushels? That's how the markets acted. Not saying that's what's going to happen, but they certainly didn't act like we were tight at the end.
Oh yeah. And that's such a good point, because just think about the fact that the June survey was off by over 2.5 million acres, right? So to think, and that's just acreage from certified FSA acreage. How is it like too far of a stretch to say that the USDA can be off 300 million bushels on a on-farm stocks count? Like that's how it's traded, at least. And that may just be something that never gets reconciled. It's just that we publish a bigger yield than we expected when we do our next stocks count.
Right.
Yeah, we've seen those swings, haven't we? I mean, we've seen multiple hundreds of millions of swings in stocks that completely changed the outlook.
Yeah, I would never expect a 300 million bushel swing for a September carryout. Like it just, to me, it didn't trade like we had a 1-3 carryout. That's all. I mean, maybe we did, but it didn't. It was a very orderly finish, if that's the case. Not huge basis pushes basically anywhere. So
right. Well, I mean, the fear would be like, okay, everyone gets excited, and we end up with let's call it 180 carryout. I think that'd be a good middle ground there. And we find stocks, and we cut demand a little bit, and we're on this big rally, and we all stare at each other. Like, now what? I think that's kind of my fear. And then you've got South America comes in, and they're, beating on exports, and we've got to figure out some way to feed 400 million more bushels of corn than last year with what seems like tight animal numbers. At least Ryland keeps telling me that. So there's just a lot of things that have to happen. And like, maybe those things all happen at cheap prices for a long time. So it's kind of the battle. I mean, I think I think the market's actually pretty justified on this rally to this point. But now I think you got to ask yourself, like going into crop insurance and all these things, like, okay, like where's my real risk? Like, how do I want to position? So besides just trying to battle like what the national yield is, like no one's smart enough to know that. There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong. So yeah, that's a tough one. And then demand, the thing about demand is, I mean, you can see a lot of it. You can see the export thing, the feed number looks, I mean, it's feed and residual. But as prices go higher, it makes it really difficult to make that argument that demand has to shoot up 500-600 million bushels.
Very good. That was a good segue. We'll go over to Ryland here to start the week in cattle. Feels like this morning, Rye, just kind of a softening tone just in some of the data that's coming out of cattle. We're actually off to a pretty good start here as we just opened the market. And then managed money continues to pile in alongside hogs, which was also interesting to see. So I guess give us some thoughts here to start the week.
Yeah, so we baked a lot of negativity into the market last week, cattle-wise. I mean, I think everybody kind of realized the writing was on the wall for a lower market. So we did see $2 lower trade in the south, and 5 to 8 lower in some areas in the north. So just you baked in a lot of pretty bad news here. The market slipped, and it just looks like we're going to try to consolidate against this 40-day moving average. I mean, I think most people would agree that there's likely some seasonal aspect to this down in both cash, carcass, and just about everything we've seen so far. So longer term, I think everybody's kind of looking at it like, not much is going to change numbers wise. Obviously we'll get a cattle on feed report here coming up pretty soon to corroborate everybody's thoughts and feelings on that. But I mean, generally speaking, you made a big down here, and there's not going to be much cash news, I think, today to kind of change the perspective. It is weakening. Have we fallen far enough? I think that's a question we got to answer this week. So the USDA didn't offer too many surprises either. They took USDA 2025 beef production down about 100 million pounds. I think that's to be expected. Generally, the steer and heifer slaughter pace kind of weakening, I think is their justification for taking that, and I think that's probably right. So it's a hard one to fade here. But on the hog side of things, yeah, managed money just keeps on dogpiling back in. Open interest up another nearly 5,000 contracts. I mean, at this point, it just seems like you're right by contract highs. You're probably going to get a decent chunk of producer hedging as well. But we've really seen cash market kind of step up here. It's holding up much better than I think anybody would expect. I mean, we're trading kind of typical summer prices, average summer prices, as we're getting into the back end of grilling season. So, I mean, seasonally, we would see these things trend lower, but this year it's a very different kind of market. We kind of suspect that we're probably pricing hogs and pork relative to beef and cattle. So I think that's a lot of the justification for the just managed money keeping 135,000 contracts on right now. It's a bigger position than they have in the live cattle, which is a little bit unnatural from historical standards. So that is interesting. There really isn't that much of a story, but it just feels like it keeps coming and at this point, with production estimates kind of coming down by 180 million pounds for 2025, it just seems like those are the numbers we're going to trade, and they're all relatively friendly.
Very good. I appreciate the update there, Rye. We just came into the open. Got December corn down 4 3/4 now at 425 1/4. November soybeans are up a penny at 1047 1/4, and December Chicago wheat is up 3/4 at 524 1/4. We'll get, as I mentioned, NOPA crush here out at 11 o'clock Central. We'll also get crop progress and conditions 3 o'clock Central. So we'll take a look at that, visit about that tomorrow morning. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.